Hello everyone and welcome to another weekend's market forecast video. So hopefully everybody is having a great weekend so far, and let's get straight into it. So last week the market was moving kind of as expected. We are still within a move to the downside in the dollar index. We have got some bounces, but we are expecting, as we said, continuation to the downside. So this is what we can kind of see entering this week. Another move to the downside, then maybe a bounce, but this is going to be a sideways to lower price action for the dollar index. So we are still biased to the downside for the dollar. For the dollar yen, we have got this move to the downside as we expected last week. Then from here, we expected some bounce, as we said, and then possibly another move to the downside. However, we have to keep in mind that the yen right now can also get sideways, so it can still remain in a choppy price action, but overall, it should stay sideways to lower for the time being. Then later, we might see a bounce down the line, but at the moment, it's not really something special, so we can see it sideways to lower for the time being. The move that was expected from here to here has already took place, and it's quite mature. So at the moment there is no value in this pair for any trading to be taking place. Euro dollar, as we expected from these lows, we reached the 109, 108, 109 area. That was very simple to see ahead of time like we usually do, especially for our members, because this is where we inform them what is going to be taking place across the market ahead of time, and they are prepared and they know how to deal with it. But here we limit the content, of course, because this is to protect our values, and what is valuable, it has a cost. So for those of you that want to take the detailed analysis and benefit in the long run, you can join us with the link in the description. So euro, as we expected, we got the reaction lower. This is a small correction. We can see continuation to the upside. 1010, 1011 area could also be reached before the move from the 13th of January can give us a consolidation later down the line. In any of the cases, even if the market does a double, we still are expecting another move to the upside from the 13th of January for the euro. For the pound, similar to the euro, we have broke this 1618 level, the 129 that we anyway expected from these lows. So this means that there will be continuation to the upside for at least another high in the pound, and that will be taking place from the next week onwards. We might see another dip, we might not. This is not a guarantee, of course, but another move to the upside, 131, 132 area would not be out of the question for the pound. So overall, regardless of the case, we are still bullish for the pound dollar for the cycle from the 13th of January for the time being. So for gold, we have got a new all-time high, as it was expected anyway. We have obviously been bullish in gold for a long time. Also recently, from the beginning of the year, we expected a move to the 3000 area, which we have reached, but we are still biased to the upside, and we can see after this small pullback, it doesn't have to be a big one, but we can see another move to the upside for gold. We can also head to 3100 or even more, so we will see. But in any case, the cycle for gold from these lows is getting mature, so the latest buyers were able to buy this one from this area on the 28th of February. So now these buyers, they are also risk-free, and profits are being taken. So in any of the cases, at the moment, we do not like gold for new traders, because you have already missed the trading opportunities, and when you miss them, you cannot force the market when you don't have the risk to reward in your favor. You have to learn that. Otherwise, the market will punish you, and you will never be able to become successful. And this is one of the concepts we teach also in our membership service, we only focus on value trades and value setups when we see them. Otherwise, the rest is garbage and we don't like to participate. That's how it works. So buyers from the end of February are the latest buyers that got into the market. So more upside for gold, of course, but for new traders, nothing good for you guys to look for. You have been late, so you have to focus on something else. Now for oil, we can see that in the month of March is an important month for the shorter term cycle at the least. So as we explained previously, we expected the drop from the $80 to the 70s. So we went lower at the 65. The cycle from 15th of January to the 5th of March might give us some choppiness at the moment. We might see a double bounce from this low to this area around the 69.70. From here, the market will talk to us and we will see what it wants to do next, because there is a likelihood of a bigger sideways bounce in oil before it drops later, but that's another story. The month of March will define the path short term in oil, and this is what we can see for the next week ahead. For the bigger picture, then you can learn it if you become a member with the link in the description and why we see what we see, so you can get properly educated. So for the next week, possibly small bounce in oil, yes, but it's going to be another reaction. So the market for now remains trapped and sideways for oil. Now for gas, we are still kind of trading within this cycle from the 31st of January. And we can see this as a diagonal price action. So the market still favors another move to the upside for the $5.2 to $6 area. So this is where we can see gas heading on later on. So as far as we are above the lows from the 3rd of March, the market should turn to the upside. However, as our members also are aware, above the $4, we knew that the market will have a big challenge to move higher. And thus, for our members, we have already got enough of this market throughout the previous moves. So at the moment, the risks are not in favor of the market, because you can see that there is a struggle to move to the upside, even though the highest probability is another move to the $5-point-something area. So for gas also is not a good market for trading at the moment. For the S&P 500, as we explained in our previous weekend's market overview forecast video here on YouTube, we have reached the buying area for the SPX cash index. And this is the area that buyers are able to accumulate for the next move to the upside to the new all-time highs for the index. And we believe that the 13th of March should be our pivot low for this market for the time being. So a move to the upside next week is very likely expected, and then some sort of consolidation before another acceleration later on. So overall, this is the buying area for the index for a new all-time highs move. So we are bullish for the S&P 500 as we said previously. So for Bitcoin, as you know, we have reached the bigger buying area after a double from the highs, which was also one of the possibilities that we expected. So at the moment, these are the areas that buyers are accumulating for another cycle to the upside for Bitcoin. So we would have to see how the next 1-2 weeks develop. But for us, we are still in an overall accumulation for the time being before the next move to the upside. So overall, buying area for Bitcoin as well. So this is what we have for this weekend's market forecast video. Hopefully you have got value out of it, and thank you for watching. If you are new here, don't forget to subscribe and especially leave us a like so we can reach to more people and traders. So enjoy the rest of your Sunday and see you in the next video. Take care.